Hey everybody, Chuck Barone here. It is Thursday, December the 5th, 2023. New Year off and running. The crazy just keeps on coming, man. You know, I was hoping New Year, new me kind of thing would be happening in this world, but apparently it's not to be, which is kind of great because it gives us something interesting and something to talk about on the show every day. As always, we want to welcome you to the show. We appreciate your support. It's going to be a fascinating time we're living through, guys, and I'm glad you're here. We'll keep you guys informed of the stuff you need to know. Markets today. Well, stock market had a down day today. Unhappy news on jobs. Actually, the jobs report didn't even come out until the market was pretty much set to close for the day and helped the market tank down, finish pretty nicely. Anyway, so earlier in the day, well, we'll talk about that, but the reason the stock market was down today was jobs. And we'll talk about the specifics of jobs coming up in commentary. The bond market today was basically a flat day. Nothing exciting happening in bonds, although they've been rallying, and the rally looks like it's starting to kind of not happen as much. So the 10-year settling at 3.72% today, up 2 basis points. So pretty flat day for the 2-year or the 10-year. 2-year now bumping up 7 basis points, sitting at 4.46%. So now you're going to back above 70%. You got this inversion. Everybody in the world predicting recession. This yield curve telling us recession. Jobs on the other hand telling us the economy is still going. I don't know, guys. It's crazy. Mixed signals again, trying to make our lives really difficult as far as figuring out and navigating the way to start investing our money and have our money working for us. The dollar today had a big day, up almost a full point today, up 0.99 on the index, settling at 105.15. Huge move. The dollar's, it's been kind of getting pushed down a little bit, but there's really no competition among world currencies right now for the dollar. As the Fed is raising rates, today's jobs report also moving the dollar, because it's showing that the Fed's going to have to probably raise rates higher than the market was hoping and keep them there longer than the market was hoping. So the dollar's strong, and as a result of the strong dollar, metals kind of giving up a little bit of the gains they've been racking up lately. Gold settling at $1,834, down $21.60. Gold had been really nicely moving up. Well, the strong dollar going to always push metals down a little. Today we had silver down 52 cents, settling at $23.22 per ounce. These are still pretty good valuations for metals. I think that if you're holding silver or gold, you're probably sitting at pretty decent profit right now. I think that they're still going to continue their move. I know metals want to rally. We'll see how the dollar goes. And I think just the dollar staying static, you'll see metals start to move to the upside as the dollar comes down to earth, which it ultimately will, guys. Then you'll see metals really start to rally. Oil today was up small. West Texas Intermediate up 97 cents per barrel, sitting at $73.81. Prices on oil surprisingly coming down. It's been a little bit warmer winter so far than they'd anticipated, killing natural gas, blowing that up. Oil coming down as the demand is coming down. I think that I'd like to see a little more relief at the pump. I don't think that these oil companies are still making tremendous profits right now, even with prices coming down, because the refined product is still selling for big prices at the pump. Bitcoin today up very small, around $15, sitting at 16,847. I've been cautioning you guys about Bitcoin, not just Bitcoin, but all cryptos right now, as this revelations keep coming on FTX. It's going to, I know that there's a place for cryptos. And the problem with cryptos is a lot of people that have their money invested in it are doing it because it was trendy. People were making money, and it was follow the leader over the cliff, right? So now these people are holding these cryptos. They're not They don't understand what they really own, a lot of them. And as the revelations come out, FTX, guilty pleas, court stuff, if they make it to court, we'll see if this Bankman fraud guy can afford to go to trial on it. So just be very cautious. I think that, you got between the government and the media and the mania for this kind of stuff, the news is probably not going to be great for cryptos. I don't know what kind of news they would need to get any kind of really big rally. So just be cautious with your cryptos, guys. News you guys need today? Well, the news of the day is hot jobs going, man. The economy defying what the experts want to say, defying the Fed and their rate hikes, defying all the news we've been reading about big layoffs here and big layoffs there. Not really working out, is it, guys? So here's the numbers. Check it out. 10.5 million job openings. Down from last month, but still a tremendous number. I mean, it's an enormous number. It's still 1.7 jobs available for every person who's unemployed. So if you're unemployed right now, I want to know why. Maybe if you're in real estate or mortgage, I understand, but if you're just looking for a job, well, you should be able to find one pretty easily. This really puts big pressure on the Federal Reserve, guys. I mean, it just does. Reality is not always what we want it to be, but we have to live with it as it is, right? The Fed is going to have to raise rates higher than we thought. The Fed is going to have to keep rates higher for a lot longer than we thought. The market's been betting. Now, they're trying to price in a recession right now. I think that's been putting downward pressure on stocks. But I think the market's been betting there's going to be a pivot next year and rates are going to come down. I just don't think that's the way it's going to work out. So employment rocking and rolling. So jobless claims just coming out early this afternoon. They were expecting 225,000, which is where it's been kind of pegged, coming in at 204. So less claims for unemployment than they were expecting, and they were already expecting a sizzling hot number. This, again, just putting a lot of pressure on the Federal Reserve because wage price spike we've been talking about on the show, how workers demanding more wages, they get more wages, the company raises prices to offset the cost of those wages, and you just start a spiral that keeps going. Once you're in it, and we are now pretty seriously, really difficult to get out of it, guys. I mean, it just really is. People are quitting their jobs and finding jobs very easily, are getting substantial bumps in pay. The average is 8%. Even people who are staying at their jobs now are getting raises averaging 4 to 5%. So this is putting big pressure on this wage price spiral. And here's another interesting little doodad I saw today too. We've all heard about this great resignation happening. Well, resignations continue to climb. 125,000 more people resigned in November than did in October. 4.17 million people in November quitting their jobs. Well, I don't know what a normal number is, but God, that sounds like a lot. So now this is, again, big pressure on employers. They want to keep their best people. They got to pay them to do it. This is good news for workers. If the wages, if the prices weren't spiking up at the same time, even higher. But, the working guy's getting a chance now to make a little more money. Of course, the executives don't want this extra money to come from their bonus pool or their perks or all the stuff that goes with being an executive. So they're trying to raise the prices to compensate. They won't be able to do that forever, guys. Okay. Another interesting news today, the ISM survey, this is a manufacturing survey, drops again, 4th consecutive month. Lowest number since May of 2020, right when the pandemic was getting going, dropping to 45.2, down from 47.2. Not good. Anything under 50 shows contraction, so manufacturing continuing to contracting now further deeper month by month. This is the 4th consecutive month showing contraction in manufacturing. Not good news. I haven't seen the unemployment numbers where the layoffs are coming, but I'm guessing a portion of the layoffs are coming from this manufacturing sector. Hopefully we can get this stuff pumped back up a little bit. But if we're going toward recession, manufacturing probably going to be one of the leaders there, along with real estate. And finally, last but not least, an interesting little tidbit. You know, we always joke about the Fed parading their yo-yos out to give us a little bit of a show, to kind of set the stage and foreshadow stuff that the Fed's going to do. So today we have Neil Cashin Carey, our friend, the chairman of the Minneapolis Fed Bank, saying that the Fed will likely raise rates to around 5.4%. Keep rates elevated, but they want to raise it to 5.4% before they pause. Well, that's about a full percentage point higher than where we are now. We're sitting at 4.35%. Fed's raised rates 4.25% this year so far. Or last year, in 2022. So we're probably looking at another full point of interest rates increases coming here this year in 2023. Further evidence that we're not going to have the pivot this year that everybody's hoping for and the market's kind of betting on. Think of it like this, guys. What we've been saying is probably likely coming to pass. The era of easy, cheap money is over. Money's going to get more dear. Going to cost more to borrow money. They're going to discourage it. They're going to encourage people to save more money. And so you're already seeing signs of that, although the savings rate hasn't increased much. But you're seeing now savings accounts, money markets, other fixed income savings vehicles having higher yields. So this is all good stuff. But I'm sure now this is just the first Fed knucklehead who's going to come out and talk about rates going higher than we thought. We'll see how it all plays out this year. I think that, we'll probably get a quarter point in February, another quarter in March. That'll get us to about 4.85%. Still ways to go to get to 5.4. When is the pivot going to happen? We'll see. I don't know if, depending on how these numbers all play out, this they're calling it now not a recession, or they're calling it a slow session, where it's like just little pieces of the economy at a time. Not the whole economy tanking all at once in a recession, but little pieces at a time. Real estate and mortgage and banking stuff and Wall Street guys, and now it's just all starts to roll down the hill. We'll see if it leads to a full-blown, oh my God, recession, if it's a garden variety recession, something short and shallow. It's going to be a fascinating year. Of course, we're going to be here to bring it all to you guys. We appreciate your support. That's it for today. We'll be back again tomorrow to wrap up this kooky week. We got big changes coming to the show. Be patient. We're trying to work out all the little stuff we want to do. You'll be seeing it coming along soon. We'll be back tomorrow. Until then, guys, we really appreciate your support. Take care and see you tomorrow. Thanks.